So as we can see on the monthly, we are starting to have a little bit of excess here on the high after yesterday's liquidation late in the day, or kind of like for most of the afternoon, starting around like 2 o'clock till the market closed. We had some liquidation kind of bringing us lower and below this 47.68 equilibrium, and that's kind of the key level I think today that I'm going to be paying attention to is if the market is able to stay above that level, um, or get back above that level. See, we're trading 47.83 after that initial jobless claims news came out. Seemed to be fairly well taken as the market, for the most part, just kind of went straight up off of the news. But we'll continue to see. This is something that we talked about yesterday, right? We had talked about, if there is a liquidation break, where's the levels that they're kind of looking to trade back into, and longer term pullbacks as far as where are some areas where we could look to get long from, as the monthly is still developing +4 and we are in a larger breakout from balance here. So like I said yesterday, something key to take away or to just kind of understand and keep in the back of your brain or keep on a notepad on your paper is don't let current price action deter you from what's actually going on in the market. As we can see, a lot of times on a small pullback, you get um, you get a lot of bearish people, so to speak, come into the market, or a lot of like doomsdayers, right? There's always a lot of kind of doomsdayers in the market, but you get a lot of people like, oh, here comes the crash, shit like that. And so you really got to use your tools to help you maintain perspective and kind of understand what's really going on or what's still going on in the market. And that's why we always start with the monthly. So switching over to the weekly, right? You can see the weekly still one time framing up. And this is kind of the chart that I said yesterday and all the time that I like to see where there's actually significant change being made. Yes, sometimes we get some cessation of one time framing on a daily time frame, but on a weekly time frame, it tends to be a bit more significant. And so that's what I tend to focus on when it comes to actual change in the market. And you can see here, the weekly has re-entered the previous week, and this is kind of an indication of a slowing down of the market, or maybe a possible balance leading into the market. We've got 2 days left, so you can see the high, or let's go off the settle from the previous week, like we talked about, that 47.68 being our +4 and the key level, and it's also at equilibrium. It's the level that we want to be paying attention to. If this weekly close is going to be above that level, that's still going to be a sign of strength. If it's below that level, it just tends to mean that the market may need to balance before it does anything else. And if it's below the previous week's low, obviously, it's a little bit weak. So one thing that you want to do when we're below that 68 is definitely be cautious with your longs on a longer term basis, on a swing term basis, right? And the reason being for that is because we're below where all those momentum traders, momentum longs are probably at. And so they may be getting shaken out, or if a further liquidation happens, you may see them get shaken out. We did see that yesterday. I think a lot of those momentum longs kind of got shaken out after we made this all-time high this week, this 48.30.75. We saw a lot of liquidation yesterday. For the most part, the market went straight down from like, what is this, like 2 o'clock? When was that? It was actually like, what, 1 o'clock? For the most part, went straight down till like 2:30, had a small 12-point bounce, and then went down again for another hour, and then down again for another 20 minutes before it kind of started to trade sideways and then spiked into the low at the close. So, always remember to maintain perspective. Don't get fooled by just the day's price action or even just the current price action of the chart that you're watching. You always want to maintain perspective. And this is why it's important, if you don't have a daily chart up or a weekly chart up, a good thing to do, something Jim Dalton does is he prints them out, right? I don't know if he still does that, but he would print them out, and that way he could just kind of see them. Okay, this is the weekly chart. The weekly chart still looks strong. This is the monthly chart. The monthly chart still looks strong. Things like that. to kind of help him maintain his perspective. Now, switching over to the daily, you can see we get this big liquidation day and kind of bring us into this 5-day balance. Right, we're kind of in this 5-day balance. Still got a little bit of daily single prints below here, so still some short liquidity. Plus, we've got the gap from the contract change. So we can imagine there's probably still some short liquidity trapped. But in reality, we really want to just be kind of paying attention to the fact that we're just kind of coming into balance off of a liquidation. We had a big outside day yesterday, and so today's key. And when we get to the profiles, we'll be able to determine a little bit more. But we want to treat this as balance. So this kind of like 47.50, right? Continuation below that 47.50, which is very close to the previous day's settle, would be an indication of a daily break from balance, and that would be a go with situation. Failure to get back below that level probably brings in some chop, and we would probably want to monitor these points of control. When we get to the profiles, we'll do a little smashing to find the real value of the balance. And then that 4,800 seems to be a key level as well. Before we switch over to the profiles, if we head over to our trade tab, look at some of this product depth. We look at we look at open interest here. We can see, the most open interest here is kind of coming in. Let's go ahead and get rid of some of these. Let's take a peek at the end of the month here. We can see most of the open interest is at 4,800, so probably a lot of people short from that 4,800, and the bottom range is at 4,500. So a lot of people probably looking for that hold below 4,800 to end the week, and I think that they're going to be, well, probably by this is the end of the year, end of the month. I mean, excuse me, end of the year, same thing in this situation. I think they're going to kind of be wrong. So, but who knows? Maybe we hold under 4,800 for the rest of the month. Anything's possible. We'll take a peek at the volume, right? That volume is still sitting at that 5,000. So most of the volume sitting at 5,000. And that's where I think that the market's looking to kind of stay below, is that 5,000. So I think we probably end up breaking over that 4,800, and we probably stay below the 5,000. You can see the 46.25 being that big put volume. So still about 100 points lower than we are now. Switching over here to the profile, a little bit of review from yesterday, right? We kind of got a little P shape. You could really see it on the profile. And then P shape, we had a little bit of excess on the top. This is something that we talked about yesterday. You want to honestly at least wait till the cessation of one time framing. And if you did, right, you still would have captured, 96, close to 50 points. If you were on and you were looking short later in the day. Some people I know were short a little bit higher, but we got that, T shape that really started to develop a 45-degree angle off the high. You can really see it in the profile, and then finally a liquidation break. No real news attached to it. Not that I found. Somebody had said that it was a bonds thing, but I looked and I didn't see any bonds auction, so I'm not sure to validate that. One thing we did do was clean up a bit of weak structure, right? We had some previous volume points of control that were untouched, some VPOCs, and it's kind of it's actually strengthening for the market, right? Which is kind of why I'm not really a huge believer that we're going to continue to the downside. Because a lot of times, these liquidation breaks actually make the market stronger, right? Because what it does is it traps momentum traders in the opposite direction, because everyone's MACD or RSI or whatever the fuck they're momentum trading on was, oversold, and they've been selling and selling and selling and selling and selling and selling and getting stopped out every time. Well, now it's like, now it's, now it's finally turned to actually selling. And so they've been selling and they're going to be like, oh, damn, now it's the time. And so they're trying to jump on and just, they're too late. And that's a issue with short money traders is they don't have that really ability to kind of strategize their positioning. And so they just get short, get stopped out, get short again, get stopped out, get short again, get stopped out, get short again, stopped out. And they didn't get a chance because they're just waiting for it to get higher to get stopped or to get stopped out again, really. Then it goes short. And so then they just kind of FOMO in. And, that's just kind of how it happens. So today, what I'm looking for, and you can see overnight inventory pretty much 100% net long. We've got to settle down 47 or 49.57, and we have the last at 53. I just marked them because that's, I think, going to be a key zone if the market trades back down there. You probably have a lot of people piling in there, as far as getting out and getting in, and it's kind of the low range of balance as well. So, and one thing to note, we did end on a spike yesterday, right? And a lot of times when we open up above a spike, it's meaning that we're rejecting these lower prices. So that's something to note, right? Kind of like we talked about yesterday, we had this spike, we rejected those prices initially, opened lower, traded above them, still couldn't find any buyers, and then the market liquid. So that's a key thing that we want to be paying attention to. As far as overnight inventory, like we said, it's 100% net long. So we'll see if there's a correction of overnight inventory that would take us back down to kind of like this 76, 68 area. Below that area is really kind of a weak area and probably gets real choppy in here and not an area that I'm really going to be messing with. And that's about that 64 to that 52 area. Below the settle, I think, is a go with situation, and we probably do trade a little bit lower. If we look back a little bit farther, we do have some single prints, right? There's a couple single prints here. And then we have some more down here. So those will be kind of important, I think, to pay attention to. Should we break that low, those will be the targets, that 36, and then we've got about like 27 to the 47.08 area. Modify this text real quick. Okay. And that would be kind of an area that would be targeted below. As far as the upside goes, really focusing on this distribution. We do have some single prints basically right at that point of control from the overnight session. Very wide point of control, so the odds of retesting it are, fairly high. And that's where we'll be kind of looking for this long from. A break below this T2 low, which is 80 quarter, hold of that gives us kind of that upside, and then we look pretty much to trade back into these points of control. And now, like I said, we'll smash these together to find this kind of balance of this range, and you can see, where the meat and potatoes is at, and it's at this lower range. So we kind of got like a value area low down here sitting around like 56, and that value area high sitting at about 96. We have a little bit of a ledge here, like 84, and there's some selling coming in here this morning around like 86 and 84, which is basically like where we're trading right now. So I think a break above that really tests back up to that 96.50, and then with that, you have like a real light volume and kind of a drop off as you get to that T2 high, which above that causes even more short covering, which would take the market higher. And then back up to that 4800 or 4812 area where we kind of have the next distribution. So that you kind of have, kind of easy to map distributions here. And those are going to be kind of your decision points in between those distributions on if the market is going to continue higher. Below, like I said, I think, and it's large distribution down here below this point of control and the point of control from yesterday, the 68, I think we're just choppy inside here from like 64 to 50. I think it's just choppy, and it's gonna be hard to trade inside there, so I won't be doing much. But if we do get below that, I think it's a go with situation, and look to take that down to that 36 level. Other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan. And I will see you guys tomorrow.